Hello, trading has closed on April 12th, 2016. Let's go over yesterday's calls. Futures were down when I made the calls. I said I expected a gap up, and I guess we had that. I said we would have a prompt trade outside of the day's range. Well, that happened. I never said it had to be in the same direction, and frankly, I usually expect it to be in the same direction, but since I didn't say it, it still worked. And I had a MEJT target of 2057.75. I said that the consequences of failure were too much risk for me to justify taking a position, but the price actually printed and it was a good support resistance level. There's a new target, most likely to print tomorrow at 2058.36. It's not really far enough under today's close to make it very useful at the moment. And that's all the MEJT system gave us from today was stalling in resistance here and a lower target. Well, let's look at some other things. This wall is actually a stilt, which happens at the end of the day. Half a diamond is enough. This is a stilt. You take your target, and it's slightly higher over today's high. Less than a point, but higher nonetheless, around 2065.90. We have a gap here, which tends to be filled. 2067.33. Let's not forget, here's a stilt, here's a diamond, here's a stilt. If we take the target of the pattern, which need not go to completion, we'd see resistance in the 2077 area. Doesn't have to happen tomorrow, but if we got 2073 tomorrow, it would give a MEJT signal that a very tradable drop would occur before Thursday's close. If that were to happen tomorrow, I'd like to see the ultimate price target print also, because that would get rid of some unfinished business. If those printed and we closed over 2062.93, we would have bar 13 of a sequential sell signal, as today was number 12. Now remember, the last of the bars can close early, so any print over 2062.93 puts you in sell territory. We're also on a combo sell signal. Now these things can fail, but if they work, when you have a combo and sequential in combination with each other, you can get some pretty good drops. The one thing which doesn't really fit is we don't have deterioration of breadth. We do have also stalling at this predefined resistance level from the triangle and its Fibonacci relationships. If we break through recent highs in this line here in style, we could be off to the races on the upside. But if we break through this low here, we should drop to 1971 and change, and probably lower than that. It's interesting to see the long-term consequence of the recent rally. You start with this low, you have the all-time high, you take this low, not the 2B low, the real low, and you draw an Andrews pitchfork. You start looking after the pitchfork ends, and you'll find this entire rally, except for this squiggle, has been in the lower half of the pitchfork, which is still bear market territory. So you have a rally in what I'm calling a down market, and it's stalling right at the Andrews pitchfork line. If we break through once again, it's off to the races, but if we reverse from this area here, we could hit the lower end of the pitchfork down in the 1800s. So I'd be particularly alert for a change in trend around the middle of the day tomorrow, around lunchtime. Doesn't have to happen then, but there are a number of factors pointing to it as a possible peak. If we are up, and particularly if we're up over 2073 and ideally over 2074.03, there'd be a number of sell signals given. If this 2058.36 price hadn't printed at that time, I think it would make a reasonable target on the downside. So the call for tomorrow is 2058.36. I do believe higher prices are coming, but at these higher prices we have strong resistance, and we're on the verge of giving sell signals. And if the sell signals work, we have a big drop, and if they fail, we have a big rally. So it's important action coming up soon, and that's today's call.